Now speaking, Gus Papagiorgio, Head of Investor Relations. At Lightspeed's fiscal Q4 2023 conference call, CEO JP Chauvet and CFO Asha Bakshani discussed forward-looking statements subject to risks and uncertainties. They provided adjusted financial measures as a supplement to IFRS financial measures. All amounts discussed were in US dollars unless otherwise indicated. Now speaking, JP Chauvet, Chief Executive Officer. This quarter, Lightspeed reported an organic revenue growth rate of 26% and GPV volumes up by 70% year-over-year. Adjusted EBITDA loss was $4.3 million, significantly better than expected. Lightspeed went public on the Toronto Stock Exchange in 2019 and is now focused on becoming the go-to platform for sophisticated retailers and restaurateurs around the world. This quarter saw the launch of several key product features, including Tap to Pay on iPhone, repairs and installations modules for retail customers, and unified payments and POS for global customers. Lightspeed Payments delivers lower rates than competing solutions with North American customers and cash deposits within one business day. The supplier network is a key strategic initiative and represents a significant R&D investment. Lightspeed plans to use AI and machine learning to improve service offerings and reduce costs. The company expects to be adjusted EBITDA break-even or better in fiscal 24. Now speaking, Asha Bakshani, Chief Financial Officer. Lightspeed delivered revenues of $730.5 million in fiscal 2023, an increase of 33% year-over-year, and adjusted EBITDA loss of $33.9 million. In the fourth quarter of fiscal 2023, revenue was $184.2 million, up 26%. Subscription revenue increased 8% to $76.2 million, 11% on a constant currency basis. Transaction-based revenue grew 49% to $99.6 million. Gross payment volumes increased 70% to $3.8 billion. Gross margins improved to 75%. Total adjusted gross margin was 48%. Adjusted gross profit dollars increased 22%. Adjusted EBITDA loss improved to $4.3 million. Share-based compensation came in at $16 million, down from $41.6 million last year. GTV grew 10% to $20.2 billion. Customer locations increased by 1,000 from last quarter. Churn rates remained consistent with last quarter. Balance sheet had just over $800 million in cash and cash equivalents. Annual net retention rate was 110%. With unified payments and POS, launch costs are estimated to total approximately $12 million for the full year, with $7 million expected in the first half of the year. For fiscal 2024, total revenues are expected to be between $875 million and $900 million with break-even adjusted EBITDA. For the first quarter, revenues are expected to be between $195 million to $200 million and adjusted EBITDA loss of approximately $10 million. Now speaking, JP Chauvet, Chief Executive Officer. I am excited for 2024 as a year of execution for Lightspeed. I anticipate exiting with strong momentum, increasing payments penetration, winning high GTV customers, and innovating more than ever before. Our unified payments and POS initiative and two flagship platforms, Lightspeed Retail and Lightspeed Restaurant, will help us achieve this. Cowen & Company analyst Daniel Chan inquired, have North American retail customers provided feedback on why they left the POS system when rolling out a unified payment solution? What impact did this have on the larger customers? JP Chauvet replied, we expect lower churn and higher GTV customers with the payments initiative. For new business, we reported no change in close rates and higher ARPU. Existing customers will be launching globally by the end of the fiscal year. We believe customers won't change their core business platform for the payment terminal and are receiving positive feedback from customers who are using the payment platform. 70% of cases have lower rates than the rest of the market, which should be a net positive for customers. Cowen & Company analyst Daniel Chan inquired, have I seen a significant increase in my Lightspeed capital deployment? Yes. How do I plan to scale that business as payments adoption is expected to accelerate following the Unified Payments Initiative? Asha Bakshani replied, the majority of customers offered capital by Lightspeed are Lightspeed Payments customers. We now have self-serve on capital in several regions, allowing us to offer them cash advances based on our algorithms. We expect this business to scale as more customers join Lightspeed Payments and become eligible for Lightspeed Capital. Truist Securities analyst Andrew Jeffrey inquired, have I understood correctly that the Unified Payments Initiative is aimed at increasing payment attachment rate to 19%? Are there any pricing changes associated with this strategy, and how does it compare to other competitors in the market? JP Chauvet replied, Lightspeed has been developing a payment service that can be used globally for the past 3 years. As of the end of the quarter, they are close to reaching 20% penetration in terms of use of their payment service. Lightspeed believes that now is the right time to make payments mandatory for all customers, as it will simplify their business and provide cost savings and better customer experience. Truist Securities analyst Andrew Jeffrey inquired, do the results from 4Q indicate that GTV on a reported basis could be down year-on-year in 1Q given the increased ARPU and subscription yield? Asha Bakshani replied, we are forecasting cautiously for GTV in Q1 due to year-over-year decreases in retail verticals such as bike and home improvement. We will be 100% focused on onboarding 5-6x the number of customers than normal onto Lightspeed payments, which will affect Q1 revenue growth. Despite this, we expect strong revenue acceleration in the back half of the year with the initial launch of unified payments and the additional volume from new customers. ATB Capital Markets analyst Martin Toner inquired, I would like to know how quickly I can move existing customers over to unified POS and payments, and what success rate I am achieving in implementing a third-party processing fee. JP Chauvet replied, this year is the year of moving existing customers onto Lightspeed payments. We plan to start with retail in the US, then hospitality, followed by Europe and APAC. Moving these customers will have a soft impact on revenue in the first half of the year due to onboarding, transactions and shipping hardware. If our plan works as expected, we anticipate high growth and profitability by the end of the fiscal year. This is the final step in achieving a goal of 50% penetration for Lightspeed payments. ATB Capital Markets analyst Martin Toner inquired, I'd like to know more about the implementation of this project. Are there any limitations on the pace of progress due to the availability of people and hardware? JP Chauvet replied, we are reaching out to customers all over the world and taking a cautious approach to ensure a successful outcome. We are offering the same rate as legacy systems, shipping hardware, sending people on site to install terminals, plug them in, and provide support throughout the process. In the first half of the year, we are investing resources to make this change as seamless as possible by buying out contracts, accommodating rates, and providing hands-on assistance. BMO Capital Markets analyst Thanos Moskopoulos inquired, have you experienced a change in the retail versus hospitality mix when shifting to higher GTV locations? Are there certain verticals that are having more success than others? JP Chauvet replied, we've seen a 6% decrease in GMV from customers with under $200K revenue, representing 5% of our total GMV and 80% of our churn. We've had good adoption from new customers, ARPU growth, and have acquired large retailers and restaurateurs this quarter. Despite macroeconomic challenges, we're seeing heightened churn in the lower GMV cohorts but good adoption from the higher ones. Asha Bakshani replied, I remain in the 60% retail, 40% hospitality markets, with no change in the split by vertical despite a move-up market. BMO Capital Markets analyst Thanos Moskopoulos inquired, have you considered deploying direct sales in other geographies in order to provide hand-holding for the Global Payments Initiative, given that your outbound sales approach to date has been exclusively focused on North America? JP Chauvet replied, we are taking a hyper-focused approach to outbound activity, targeting higher GMV merchants in order to ensure strong unit economics. We have teams all over the world and our cohorts are growing at 110% year-over-year due to customers buying more modules and more from Lightspeed. This means a higher blend of outbound compared to what we would have historically had. JP Morgan Chase & Company analyst Jinjin Huang inquired, have you developed a plan B in case businesses are not ready to invest in the product, are happy with their current systems, or get price matching from other peers? JP Chauvet replied, we launched our new hospitality platform yesterday, which is one of the best products we've ever built. We conducted tests on cohorts of customers prior to launching this initiative and found that change could be made as simple as possible. If customers do not want to switch to Lightspeed, we will charge them a transaction fee, but our modeling shows it will be net positive for Lightspeed. JP Morgan Chase & Company analyst Jinjin Huang inquired, have you planned any unique sales and marketing activities, beyond the outreach you described, to take advantage of the unified platform being done in this moment? JP Chauvet replied, we recently hired a new chief marketing officer who was previously employed at Klaviyo and Dropbox. This hire will help us step up our game in marketing and increase awareness of the platform's capabilities. Our platform is used by restaurants and retailers to manage their email campaigns, food, menus, kitchens, back office, and more, which is the hidden side of the iceberg. Katie, our new CMO, has twofold mandate. 1. Become the go-to platform globally for Morgan Stanley analyst Josh Baer inquired, do any of the location disclosures need to be moved to annual disclosures? Asha Bakshani replied, I disclosed that Acquid had a total of 168,000 locations outside at the end of March 2023 this quarter. We will disclose the annual total location count annually but not quarterly. Morgan Stanley analyst Josh Baer inquired, will I continue to receive quarterly ARPU data? Asha Bakshani replied, I expect subscription revenue to grow 10% annually, gross merchandise value, GPV, to increase 50% year-over-year, and gross margins of 40 to 45%. I will provide all the necessary components for modeling our business, such as average revenue per user, ARPU. Bank of America Merrill Lynch analyst Koji Ikeda inquired, have you discussed the fee structure associated with Lightspeed payments if customers opt out? What is the fee around the world, and what are your assumptions about churn or extended sales cycles due to this initiative? JP Chauvet replied, we have seen no change in sales cycles, close rates, or ARPU since launching unified payments globally 2 months ago. We anticipate a low churn rate for high GMV merchants who will appreciate the automation and speed of transaction provided by unified payments. For lower GMV merchants, we expect a higher churn rate. However, this is not significant as only 5% of total GMV comes from customers below 200K. Customers have been given a grace period and at the end of it, they can either find another vendor or use Lightspeed payments and be charged a 50 basis points transaction fee. We have modeled our churn assumptions conservatively, making us confident in our guidance for the year. Bank of America Merrill Lynch analyst Koji Ikeda inquired, have the macro environment and the new payments initiative impacted the decision to withdraw the medium-term organic revenue growth guide of 35 to 40%? Asha Bakshani replied, the company is focusing on unified payments in the first half of the year, onboarding 5x 6x the number of customers they typically would. This will have an impact on the revenue guide for the first quarter. In the back half of the year, as the initial launch of unified payments is finished and they get the benefit of the added volumes of customers, strong revenue growth is expected exiting fiscal 2024. JP Chauvet replied, I'm clarifying the difference between software and payments. With software, when a customer buys it, it immediately translates into revenue. However, with payments, especially the unified approach, it can take up to a quarter or even a year to move, so it's two halves. This is why I withdrew guidance for this year, as it takes longer to move. Stifel Financial Corporation analyst Suthan Sukumar inquired, have you seen any changes in customer acquisition cost, CAC, since transitioning to a more direct sales model to target higher gross transaction value, GTV, merchants? Do you think that more focused investment in sales and marketing would help to drive a greater impact with these larger merchants? JP Chauvet replied, over the past year, our CAC has decreased and we are seeing good progress with unit economics. Outbound marketing is more expensive than inbound, but if you target the right segment of customers, then a slightly higher CAC can be afforded as payback will be shorter with customers on payments. Our focus is on unit economics and the first half of the year was about bringing as many customers as possible on payments, whereas the second half is about leveraging those customers to increase revenue and invest more in customer acquisition. Stifel Financial Corporation analyst Suthan Sukumar inquired, have you seen an increase in competitive intensity in the market recently, especially when moving up market? JP Chauvet replied, Lightspeed has two main product categories, retail and hospitality. Their new retail platform is competitive, and customers are switching from other cloud-based systems due to its advantages. They have been hard at work for 2 years rebuilding their retail platform from scratch, removing technical debt, and making it state-of-the-art. In hospitality, Lightspeed's global presence dominates outside of the US and they recently launched a new version of their hospitality platform. The launch included hardware, software, analytics, and focus on the US market where they want to own the more established, Michelin star, and resort restaurants. All products are brand new with no technical debt, allowing them to develop faster than historically. Gus Papageorgiou replied, I have one last question, what is the timeline for completing this project? National Bank financial analyst Richard C. inquired, have you set a target for achieving a balance of growth and profitability in the next couple of years? What percentage of your customers have adopted payments, and how many of those have also taken on Capital? JP Chauvet replied, I recently launched Capital, a product that surfaces offers for customers at the right time. We have pre-approved many customers and withhold on sales side to ensure low default rates. This allows us to better understand our merchants and run their businesses more effectively. JP Chauvet replied, "This year our goal is to be as close as possible to the Rule of 40. We are focusing on sales efficiency and plan to deploy payments. Our cohorts or customers grow 110% year over year, and we have no significant market share. We need to show that we can be break-even or better, but we also want to double down on getting the market if our unit economics are good. The Rule of 40 will always be weighted toward growth, yet we must demonstrate that we can be profitable as an organization." Gus Papageorgiou replied, "I just wrapped up our meeting with everyone. If you have any further questions, please contact the IR team. We will be back in touch after the next quarter. Thank you for joining and have